In this section, we're going to discuss the Mortgage Acts and Practices Law, otherwise known as MAP. Mortgage Acts and Practices, MAP. The Mortgage Acts and Practices Law is also known as Regulation N, and it deals with advertising. The MAP rule sets specific deceptive acts and practices in advertising of mortgage loan products, and it prohibits misrepresentation in any commercial communication as it relates to the terms of mortgage products. So MAP deals with advertising in commercial communication, commercial products. These are like on the internet, the radio, billboards, print, and television. If you remember, TILA also deals with advertising as well, but MAP is another law, Regulation N, that also deals with advertising, but more specifically commercial communications. Usually the airwaves or the internet or things that you see on TV is where MAP comes in. The FTC was the original regulator, but now it's all under the CFPB. Just like a lot of the other rules and regulations we've discussed, they are now regulated by the CFPB. So specifically, Regulation N was issued to prohibit false and misleading advertising of mortgage products, especially on the airwaves like TV, radio, internet, things of that nature. Advertising for mortgage products and services cannot contain any material misrepresentation, whether they are stated, expressed, or implied. So you need to know what's considered material misrepresentation. A fact is material if the knowledge or the truth would have led to the consumer to maybe make another choice. If the information would have caused the consumer to make a different choice, then that's considered material. For example, the way that we use the word fixed. This was a big thing with the CFPB. A lot of people lost their homes because they thought their mortgages were fixed because the advertiser or the loan originator told them it was fixed. But that was misleading for some because it was fixed for 2 years and then adjustable, or fixed for 3 years and adjustable. Under this law, they think that's misleading. You cannot use the word fixed unless the product is fixed for the entire term. So say if it's a 30-year fix, then the payment will remain the same for the entire 30 years. If it's only fixed for a specific period of time, you cannot lead with the word fixed. You have to say it's a 2-year, you have to say it's an adjustable with the 2-year fixed period, or it's an adjustable with the 3-year fixed period. It's misleading advertising to lead with the word fixed because a lot of people believe that it's fixed for the entire period of the loan. So again, if it's fixed for the entire period, the entire term, then go ahead and use the word fixed. But if it's not fixed for the entire term, maybe it's adjustable for the first maybe it's fixed for 2 years, then adjustable, or fixed for 3 years, then adjustable, then the way that should be described is it's an adjustable rate mortgage with a 2-year fixed period. Or it's an adjustable rate mortgage with the first 3 years being fixed. It has to be completely understandable to the borrower. Other than that, it's considered material misrepresentation, and it will be a violation of Regulation N. So again, remember, Regulation N is the Mortgage Acts and Practices Law or regulation. They call it MAP, and it deals with misleading advertising. All right, guys, see you in the next training session.